Thomas Mumford, president of Scottie Resources. We are a BC exploration company focused on bringing an asset into production in the near term. It's a direct ship ore model project.
Good to meet you. We've not met or spoken before.
Yeah.
Right.
Yeah.
And is Brad here as well? Or is he?
He's at the conference today.
Oh, fantastic.
Yeah.
Okay, good. Got the A team here.
Yes.
That's what I like to see. Well, look, tell us a bit about you. Where are you from? What have you done?
I am a geologist by training.
Okay.
Yeah, I've got a PhD in geology. It was on rare earth elements back in the day. I've worked across Canada, been in exploration for the last 15 years. I was a professor at BCIT, so it was a technical school in a mining engineering program, but now I'm fully into junior mining.
Right, into the world of commerce.
Yes.
Right. It's not as easy as it looks, is it, really?
Well, there's a bit of a grind there.
Okay. Well, look, I think what would be really useful, maybe because there's a new audience maybe looking at this, if not kind of heard the story before, as well as the usual guys and gals, just outline the plan. You've given us a bit of a clue there in terms of this a nearer term revenue type idea. What does that look like? What are you trying to do?
We've got a project in northern BC. So it's located just north of this town called Stewart, BC. And Stewart has the unique feature that it's on deep water shipping port. So it's the northernmost ice-free deep water shipping port in North America. Mm-hmm. So that's where Brucejack mine and Red Chris mine ship out their concentrates.
Okay.
We're on a road 40 kilometers north of that. And so we discovered this high-grade resource, and we're trying to bring that into production as quick as possible.
Right.
So timeline to produce, 2028. It's a direct ship ore model, so that means we don't need a mill, we don't need a tailings facility. We're shipping a high-grade gravel product overseas.
Right.
And we've already lined up the buyer. So it's going to be Ocean Partners Trading, a metal trader group, and they're going to buy the product. And this summer, we've done a bulk sample, so a 10,000 ton bulk sample. We were able to get 4,500 tons of ore out of that and kind of do a mock model of this whole thing. And, and we've shipped the product down to the port. It's waiting for shipment right now. It's probably ships out in the next couple of weeks.
Right.
And that'll be net revenue positive for us by the end of the year.
Okay, so you're surrounded by all the great and the good already with their own high-grade projects.
Yes.
But you've decided a DSO as a kind of solution to kind of generate revenue rather than dilute your shareholders. That, in essence, that's it.
Yeah, it's a simple project. There's other mills in the area.
Sure.
There's this port. There are unique advantages for us. We don't need to be big enough to build our own. I mean, that's $300, $400, $500 million to build these things.
And a time frame.
And a time
associated with that. All of that kind of good stuff. So you're kind of bypassing this. So you're not necessarily wanting to capture all of the value downstream yet.
Yes.
But get things going. Okay, so tell us a bit about Ocean.
Ocean Partners, they're like a Glencore, Trafigura type group. They buy concentrates, they blend them together, and then sell them to smelters.
Right.
Right now, there's a structural deficit in smelters. There's not enough supply for all the smelters that China has built, and therefore they're not charging high treatment charges. They're actually paying people for material right now. The treatment charges are negative at this point.
Okay.
So there's a real opportunity to get a good deal on going to a smelter.
Right, and Ocean get a board seat as well, did they, as part of this deal?
They did. So we brought Brent Omland, which is the CEO of Ocean Partners, is now on the board.
Okay, fine. And what does that agreement look like? How long does it last? What's it actually do for you?
So they now own 11% of Scottie as an equity position. They have an offtake agreement for the resource in the feasibility level study, which we're working on right now. So that covers their offtake. Now there are buyout provisions. There's a lump sum version for the first 18 months. And then after that, it's on a per ton basis. Yeah. And then in addition to that, Ocean Partners has agreed to fund up to $25 million US for the construction of the whole project.
Right. Okay. In terms of flexibility for you and your shareholders, what have you kind of built into any agreement, any discussion with them?
So there's like a fixed lump sum buyout that we can trigger in those first 18 months. And after that, it's that per ton charge. And neither of them is prohibitively expensive.
So, right. But explain what the per ton charge means. Is it 100% of whatever you produce initially?
So no, it would be like once we have the resource defined as a reserve in the feasibility study, then there's so many tons in there, and if we can ship those to Ocean Partners, and if we ship them to another place, then we would have to pay Ocean Partners a penalty on a per ton basis.
Right. Okay, that's what it looks like. And obviously, the PEA recently. Can you just talk about some of the economics that it seems to indicate initially?
So the base gold price that we did our PEA at was $2,600 US.
Right.
And at that price, the project is worth $216 million US or Canadian. Sorry. If you go up to $4,200 gold, which is the high price that we showed
Yeah.
which we obviously have hit recently,
Yeah.
it goes up to $670 million
Okay.
NPV at a 5% discount, and the IRR at that point goes up to 150%.
Some leeway in there.
And the interesting thing about the PEA is we also looked at, there's a mill down the road, so it's the Premier Mill. So it's located halfway to the port. So we drive by it going out.
Yep.
We looked at what would it look like if we, instead of shipping the product out, we toll milled it.
Yep.
And it adds about $150 million to the NPV of the project. Now, at this point, we don't know if that mill is going to operate or not. There's like the company's in trouble right now.
Right.
There's a new plan to get it started by another group.
Mm-hmm.
But there's a natural synergy there with our ore and that mill under capacity.
What would you need to engineer? Say if they were in difficulty, who would be a sort of natural buyer of that?
Well, the Fiore Group, backed by Frank Juster, has
Right.
just committed to trying to raise $150 million for it. So that's the new group trying to restructure
Are you
that
involved
project.
with them in any way?
None.
No. Okay, fine. Okay, so the PA looks like that. Doing a study at the moment, trying to understand. Is that primarily just focused on the DSO?
The bulk sample?
Yeah.
Yeah, it was a mini version of it. So we got the permit in July this year. We were blasting a week later.
Yeah. 4,500
tons. It's going to be about 15 grams a ton. It's already been crushed and driven down to the port.
Right.
Yeah.
So if you, when do you sort of give guidance in terms of timing for all of this to start happen and any kind of revenues generated for you? What does it do for your bottom line?
For the bulk sample?
No, I'm talking like the kind of time frame in terms of moving from bulk sample to actually.
So we're plotting it out right now.
Yeah.
The permitting is the longest lead time item that we have in the process.
Any ideas?
It's about we need baseline studies for 2 years, environmental baseline.
Okay.
So we're planning to submit our mine permit application in 2027.
Right. Okay.
And it's probably going to go through what they call a joint permit amendment application.
Yeah.
Which is this, because we have a historic mine and we have a historic permit.
Mm-hmm.
It's basically modernizing that permit to current, so you don't need to do an environmental assessment, a full-scale EA.
Right. So to be clear, baseline is 2 years.
Yes, started already.
When?
Early this summer.
Okay. And can anything run concurrent to that, or is there another process straight after that?
The engineering studies run concurrent to it, like
Okay.
the mine design and the feasibility level engineering.
Okay. So because you said at the beginning, maybe 2028 is the
So
time.
you submit the mine permit application in 2027.
Yeah.
For context, SCOT submitted theirs, and it was 8 months after they submitted that they received their permit.
Right.
And theirs was much more complicated than ours. They had a mill and a tailings facility.
Okay.
So if you use that as a metric,
Yeah.
then we would be in production mid-2028.
Okay. Any idea of kind of starting point, ramp up, and what the kind of steady state revenue or cash flow could be for you, assuming whichever,
So-
2,600 or say 4,000?
Like, we start producing, it's like commercial production is right away,
Yeah.
like full scale. So like
First,
first,
it's digging, loading, trucking.
it's
shipping.
open pit mining at the surface to
Yeah.
start.
Yeah.
It's very analogous to what we did at the bulk sample. Like
Yeah.
we blast it, and the next week, like we got the permit, and the next week we were blasting.
Yeah.
Like the veins outcrop right at surface. The open pit runs for about a year and a half, and then it goes underground. So the open pit pays for the entire mine payback, the development costs.
What do you mean? Explain.
So the open pit is near surface, high grade mineralization. The open pit is in the PEA is 7.7 grams per ton.
Mm-hmm.
So you mine that for a year and a half, it's about 80,000 ounces. That pays to do all your underground workings and development after that, and it pays back your initial capital costs.
Right, and so in terms of, obviously, I understand the kind of Ocean's contribution, but in terms of additional sums needing to be raised to kind of start the open pit, what's that look like?
So you've got, the build out is 130 million
Yeah.
Canadian, and we have around 40 already set up, the $25 million US
Yep.
facility. So we need to fill that gap in the coming couple of years.
Yep.
We could go traditional financing route for that, private equity, a gold prepay, a stream, royal. I mean, we could use a lot of different structures to get that out there.
Have you started or initiated any of those discussions and have sort of subject to type term sheets?
We don't have subject to. No,
Right,
we need to get into feasibility study before that really comes to, but we're having those discussions, and I think there's a lot of people that are interested in this type of structure.
Yeah, because we've seen a lot of companies kind of move to this. I keep referring to it as a nearer term revenue model from switching from an Explorco thing, which I think hasn't really served companies well in recent times, okay, for lots of reasons, even the super high grade ones like yourselves.
Yeah.
So this idea is new. I'd say we've spoken to maybe 18 companies doing a similar sort of thing,
Okay.
and it's worked for them. And I don't know what reaction you're getting when you're having these kind of conversations. What are the kind of concerns, or what are companies saying that sort of attracts them in equal measure?
Yeah, I mean, near term is very attractive with these gold prices. To capitalize on this market right now is very keen. I think our bulk sample is going to really show that. I think people's concerns in Canada are around permitting and the First Nations and what does that all look like. We've got this great thing going where the Nisga'a, the First Nation in the area, they're the only treaty nation in BC, which is a great thing in itself. Yeah. But they just bought the port that we're going to ship the facility out of. So them and the Taltan and a shipping company all went together and bought the port. So they're totally aligned on that basis. So we're now working together with them to come up with an IBA for the project.
Interesting. Okay, that's fascinating. Obviously there'll be a big kind of debt component to this.
I went a little big. It's like
relative
to others,
percentage terms.
Sure,
percentage terms. But hopefully, with something like when it's nearer term, it's not going to be 50-50 on equity debt. It's going to be
probably more like 70-30.
Right, exactly. Yes. So it's good news for you, right? Yeah. Again, in terms of you think you get that from the home market, presumably. You're not going to need to go chasing dollars in Europe.
I don't think we will, but we would be open to it. I mean, there's a lot of players right now that are interested in the space, and we're just looking after our shareholders. So whatever. Okay. I think we would run a process more or less just to figure out what the best structure is for us.
So let's look at what's going to happen between now and mid 2028. We're going to focus on, obviously, you've got the bulk going on. We're going to look at the funding for the open pit, which will fund the eventual mine, which makes a whole bunch of sense. Concurrently, will you be doing either step out drilling, exploration drilling?
Yeah.
And have you got the budget for that?
So there's this engineering track, permitting track to get into production as soon as possible. Yeah. Concurrent with that is an exploration program to show that we don't have a 700,000 ounce resource like we have now. We have a 2 million plus ounce resource. I think.
How do you do that?
You keep drilling exploration holes. I mean, our focus will be to get in production. That'll be the first priority. Absolutely. And then in addition to that, we want to raise a little bit extra money and drill it. I think we have about a plan for about a 10,000 meter program this year to do exploration, like
2026.
2026, big step outs.
Yeah, okay.
Yeah.
And do you think that you need to sort of, we've got the same thing going with the one project I'm involved with. It's very similar to yours, and like I say, a bunch of others that I've spoken to, where it's kind of a case like we've got some near-term revenue, which will fund everything, which is an anti-dilutory measure, which is obviously good news, but perhaps we've got eye slightly off the ball when it comes to exploration, because we need to get this thing over the line. So things slow down on the Explorco and that kind of growth component. Yep. Does the thing that's going to impact you? Do you think you need to say to shareholders, look, hey, give us?
I think, from my perception of where we're at in the market right now, we explored for many years. We're having fantastic success. I mean, that was the basis for where we are today. Yeah. But it was that transition to near-term producer that has caused a lot more interest in us. Right. But you need that blue sky potential, the growth component to be there. And so you can't stop that completely. But if you are going to meet your timelines, of which you've laid out there, that you need to meet those, that has to be your priority.
Well, it's the budget allocation as well.
Yeah.
You can't have everything.
Yeah.
Cake and eat it and all of that sort of thing. And what's that done to the share register? Or what do you think it will do to the share register?
We launched a financing this morning, so $23 million. That's basically already allocated with like 4 names. And 3 of those are existing share register people. So I think our existing share,
what
we're doing, supporting us as we go forward. I mean, we've got some pretty big names in the project now. Like Ross Beatty owns 5% of the company. Ocean Partners are now at 11. We've got a lot of support.
So you've got the right kind of profile going on in terms of because obviously retail kind of help with that liquidity, etc. So what would you say to them in terms of this model being the right thing for you at the right time?
Yeah, I mean, we are now fully financed for another year, full studies. We're going from PEA into feasibility. Like this is this is a place in the market that you want to be with gold at $4,000. And if it's going to go to 5,000, absolutely. This is the kind of space you want to be in. It's something that's going to produce in the next couple of years and has leverage and optionality. Yeah.
Right time.
Yeah.
Right place. I do. I have to say, I do like the model, and I like the kind of step change in thinking for you guys. I know it'd be interesting to see what you guys get up to. I am, and I continue to be equally impressed with the kind of grades that you're finding and pulling out of the ground. Hopefully, in the not too distant future. So keep doing that too, please.
Thank you.
Good to meet you, Thomas.
You too.
Cheers.